All right, let's do a quick mic check here. You can raise your hand or pop it in the chat if everybody can hear me. Hopefully. All right, looks like we're getting some yeses. That's perfect. Well, thank you everyone for coming. We've got some people trickling in. If you do have to cut out early, there will be a recording, but you don't want to miss what we have to show, so please stick around. We're going to go through a quick, 5-minute spiel from me on EdgeClear and who we are. I realize some of you may not know who EdgeClear is, and then I'm going to hand it over to Daniel, and he's going to take you through some of these trading indicators, which obviously that's the main show, so I don't want to take too much time here. Before we get started, I do have to mention that derivatives trading carries a high degree of risk. It may not be suitable for all investors. If you do open an account with EdgeClear, please note there can be a material conflict of interest for your account based on the FCM choice, platform use, data feed, and execution. And as always, past performance is not indicative of future results. So our agenda, I kind of went over it. We're going to do a brief intro to EdgeClear. What is EdgeProX? That is the platform that we will be demonstrating these indicators on. And then just an overview of the main show, again, of the indicators and functionality in EdgeProX. Then we'll have some time for a Q&A, but Daniel might take some of your questions during his presentation as well. So what is EdgeClear? We are an independent futures brokerage. We were created by an award-winning team. Our founder has been in the industry for a long time. Myself and my colleague Max helped get EdgeClear up and running as well. We have years of experience, and we are continuously innovating and team building. Everything we do is trader inspired. And just so I can put some context behind the buzzwords there, we all trade here. Every one of us has trading experience. So everything that we do, people we work with, like trading indicators, that's all meant to provide tools and useful material to our clients and members. So what do we offer? Basic overview, we offer a lot of trading platforms, EdgeProX of course being one of them, connectivity to Rhythmic, CQG, trading technologies, and Teton routing. And we also have an analytical tool called EdgeWatch, which is free to EdgeClear members who are using the Rhythmic data feed. So if you're interested in performance analytics, in addition to some of these trading indicators, go check out EdgeWatch. I can help you get set up with a trial as well. What else do we offer? These are more specialty type things, but CME membership consultation. If you're someone who trades a lot of volume on certain exchanges with the CME, we can assist with that. I do host a podcast. I've got to get Daniel here on the podcast at some point. We can talk trading even more, but it's called Behind the Screens if you want to check that out. We do offer IRA accounts, and we make foreign introducing broker partnerships as well if you are an IB overseas and want to introduce non-US business. What is EdgeProX? This is the platform we will be going over and the indicators. It's an all-in-one solution for active traders. It offers everything that you see on this slide. Hopefully my screen is coming through okay. Over 300 plus studies, and you can get even more if you check out trading indicators today to enhance the software. And all of this is $34.99 a month. And it includes all of this as well: heat map, advanced depth of market, volume profile, replay mode, imprint charts, cross-instrument trading. It's a very feature-rich program, so definitely check it out if you are interested. And then just questions, or if you need support, you can visit our website. There is going to be a member special, so for all of you attending, anyone who gets the recording later on, if you go to edgeclear.com/trading indicators, I will show this link again at the end. You can fill out a contact form to get a specialized rate structure, which is right here on the next slide. We're offering out 79-cent commissions on non-micro products and 20-cent commission per side on micro indices products. Of course, exchange NFA fees and any routing fees will apply. And I'm sure Daniel will have this as well, but if you are interested in the indicators that he is going to show, you can visit tradingindicators.com/edge and check out special deals there. I would encourage everybody to go to edgeclear.com/trading indicators and tradingindicators.com/edge to check out everything. So without further ado, I'm pleased to introduce Daniel. He is the managing partner of Trading Indicators. He's a trading software engineer. He's got over 2 decades of experience building powerful tools, algorithms, and all of this. And their focus is on intelligent indicators to generate powerful signals while keeping in mind your needs for simplicity and obviously display visuals on all of that. So Daniel, thank you for coming on. I'm going to give you the screen and presentation now. Give me one second.
Thanks, Ian. Hi, everyone. I'm super excited to be here, not only because it's our first webinar together with EdgeClear, but EdgeProX is actually a platform we are very familiar with. And I kid you not, we have probably written more than 500 indicators and strategies for that platform. So that's really it's been our bread and butter for many years. And I'm super excited to present what we developed for you guys today. So let me go ahead and share my screen. Just a second. All right, there we go. Perfect. Ian, can you see my screen?
I can, yeah.
Great, perfect. Let me just make this a bit bigger. There
Can
we
everyone
go.
else see Daniel's screen? Feel free to pop it in the chat there.
Great, yeah, I think it's gonna be working. All right, so what I'm going to show you today is what we commonly refer to as market sense indicators. And before I discuss or tell you what these are, maybe a few words about who we are. So we're a bit different, I believe, from the average person that you see on webinars who actually are software engineers by training. So I did my undergrad in Germany. You probably can tell by my voice, but then went for my grad studies to Montreal, where I went through all the levels. I did my master's, my PhD, with the objective of staying at the university and being a researcher in software engineering. And I was teaching software engineering courses, and I went through all the ropes. But I always had a fascination by trading. I've been trading on my own, and as every trader who starts up, you make a lot of mistakes. And when you make mistakes trading, that typically means you spend or you donate quite a bit of money to the markets. I overtraded, I took too much risk, I revenge traded, I just made really terrible emotional decisions. And I came to the hard realization that, wow, trading is hard and I need help. And being a software engineer, help meant for me, I need better tools that help me make better trading decisions. And this is really how our story started, how the story of tradingindicators.com started. So we operate an online store called tradingindicators.com, and where we offer trading indicators for various platforms. As I said, we have a lot of indicators for EdgeProX, but we also offer our indicators for other platforms as well. And most of these indicators, they've actually been developed originally to help ourselves in our trading, or help me in my trading to become a better trader. And then when I thought, if these tools help me, perhaps they will help others as well. And this is really the mission or the origin of tradingindicators.com. We do have a team. My colleague and also managing partner, Homa, she's here with us tonight as well. And she will be manning the chat. So if you have any questions, feel free to write them in the chat, and Homa will do her best to answer them in the chat, or sometimes she will also interrupt me if need be and ask the question directly to me. So don't be shy. Let's make this as interactive as possible. So one of our missions behind tradingindicators.com is that we want to do things a bit differently than the average Joe. So we really focus on developing unique features which you perhaps do not see everywhere else. So this could be using rich visualizations. This could be real-time statistics, which we show on the chart, or some other things which make our product stand out, and more importantly, will help you as traders make better trading decisions. Because I really believe that you have your indicators, but the indicators do not trade for you. You are the trader, and in the end, you will make the decision. But what an indicator can do for you, it can help you to make a better informed or a better trading decision altogether, a trading decision that you feel comfortable with. And this, to me, is one of the main roles of the trading indicator. We believe that an indicator should be intuitively usable. If it's too complicated, if it clutters your mind, if it confuses you, it's no good. So we really value simplicity over complexity, and the user experience of using an indicator is very, very important. And of course, it should be user-bound. So we do listen a lot to our users. Many of our indicators are now in generation 5 or 6, and these these iterations have been driven primarily from user feedback. So comments that users left with us or suggestions, and we listened and we integrated them into our indicators. So this is really how what our mission is and how we operate our business. All right, so we do offer indicators for many platforms. As I said, EdgeProX is our main platform, and we've written, as I said, more than 500 indicators for this platform. Many of them are available on our online store. Some of them have been written as custom projects, which are not available, but many of them are available on our online store. And we've even written a strategy builder for EdgeProX, which allows you to click together a strategy, an automated strategy based on your own rules for EdgeProX. All right, so what will I discuss today? I already discussed or told you who we are. And next, I'm going to talk about our Trading 360 plan. You'll see in a second what these are. Then, of course, we're going to look at our indicators, the market sense indicator, and why we actually call them market sense. And then, of course, there will be charting, and we also do have a special for you, but you have to stick around till the end for that. Okay, so Trading 360. I do believe firmly that there's no what I call silver bullet. There's no one-size-fits-all approach for trading. Indicators or trading strategies, they work well for a given market condition. But market conditions change. A trending market will eventually come to an end and might reverse or go into a sideways consolidation. And all these different conditions require a different approach to the market and a different indicator, a different set of indicators to be used with that. And I really believe that this is the best way to approach the market instead of one size fits all, because this will never always work. You need to adapt to the market and the current market conditions. Now, let's quickly review what are the three main market conditions. Of course, everyone has heard about a trending market. A trending market is where price moves into one direction for a prolonged period of time. It's typically range bound, but in a sloping channel. As you can see here as an example, a clearly established uptrend, and we have a sloping channel, a range bounding price action. The steeper the slope, the stronger the trend is. What's important for a trending market is that there will be retracements. It never goes up in a straight line. That is impossible. There will be retracements. And if you trade the trending market, you need to be aware of that. So you will either give your trade enough room to not get stopped out in a retracement, or perhaps a better approach is to wait for a retracement, enter near a bottom of a retracement, near the lower end of the channel if you want to go long, and then enter long and place your stop below the channel, therefore mitigating the risk should you get stopped out. Now, of course, a trending market eventually will come to an end. Nothing goes up forever or goes down forever, and an uptrend might reverse into a downtrend, for example. And if you try to anticipate, these reversals, then then you might be in for a reversal trade. Just a bit of a word of warning: spotting these reversals is incredibly difficult, because typically in a trending market, the chances are higher that the trend will continue than it will reverse. So spotting these reversals is tricky, but there are some warning signs which you can leverage. For example, if the trend channel breaks, as we can see here, we had the slope, but eventually it breaks down. This could be a warning sign that the uptrend has come to an end. Or what we can do also is to look for divergence. Divergence is a discrepancy between price action, so price might go up, but an underlying indicator might go down. Then you have a divergence, which can be a warning sign that the trend will reverse. Of course, if you want to go against the trend, if you want to be a counter trend trader, make sure to use a tight stop loss, because chances are you might be wrong after all, because spotting these reversals and being right is incredibly difficult. And it
You're
could
looking
be
at someone who's had that difficulty many times.
Yeah, it takes a special personality to trade that way, because you must not get discouraged if you get stopped out a few times in a row. And many people do get discouraged. This is not the right trading style for them, because it doesn't feel good to have a couple of losers in a row. But the upshot is, if you're right, you're getting in at a really good price, and you might make up for all these losses that you encountered along the way. Just to contrast trend trading with counter trend trading, let's have a look at this slide here. And interestingly, it shows the exact same symbol. It's exactly the same price action if you look at the upper half and the lower half, but the upper half shows a classic trend entry. A classic trend entry happens typically when we have a clearly established trend. In this case, a clearly established uptrend. And we can see this by the fact that we're making higher lows and higher highs. We've taken out the previous high over here, and these are all important factors that can make you to the conclusion that, well, we are in a clearly established uptrend, and we have an entry up here. Now, at the bottom half, we have a classic counter trend entry. And you can see right away a counter trend entry happens much earlier than the trend entry. Yeah? In fact, it happens at warning signs where you might think, okay, the downtrend here might come to an end and might reverse to an uptrend. And this is a counter trend entry. And you can see here the entry price is much better than a trend entry because you're basically betting on the fact, okay, this trend will reverse. I want to get in early. That is one of the big differences between counter trend entries and trend entries, because in a trend entry, you wait for quite a while to make sure the trend is clearly established. For a counter trend entry, you go in at warning signs already. And just one little heads up, what you see also on the chart here, these arrows and these lines here, these are actually our indicators. So we have an indicator developed for a trending market, which is called 1 to 3 strike. And we also have an indicator to spot trend reversals, which we call Divergence Cloud, for going against the trend. And of course, I will discuss these more thoroughly in just a bit. But before I do this, there's one more market conditions which we should mention, which is the sideways market. And why is the sideways market important? Well, because it happens a lot. So according to some statistics, the market goes sideways 70% of all times. So that's often, that's more than a trending and counter and reversing altogether. So in a sideways market, price action is typically bound by a horizontal channel of resistance and support, resistance to the upside and support to the downside. And typically in a sideways market, you have fairly low volume. Now, there's also different ways to trade the sideways market. One might take scalping entries when price approaches levels of resistance and go short, and vice versa when price approaches support. You might go long. That's one way to trade it. Another way to trade it is to wait for breakouts. When I say breakouts, I mean breakouts outside the or out of the horizontal channel. Here we have such an example of these breakout trades. And in fact, this is our third indicator, which I will introduce to you today, which we call Volatility Crusher. And this indicator has been designed to spot these breakouts out of a sideways market. And when this happens, and if this breakout is accompanied by increased volume and some other factors, chances are that price will continue in the direction of the breakout for quite a bit longer. And this is where you're betting on. You're going to go long here if you have a long breakout, hoping that price will continue in the same direction for a bit longer. All right, so now we have reviewed the three key market conditions. But I should tell you, there's no market condition which works better than others because they can all be traded. It is really just a matter of using the right trading approach and the right indicator. And this is why we're here today, because I want to introduce to you three indicators which we have developed to trade these three market conditions. So we have one indicator which we call 1 to 3 strike for trading the trending market. We have Divergence Cloud for trading the reversing market or for spotting fades. And we have Volatility Crusher to spot breakouts out of a sideways consolidation. Okay, so a bit more theory, and then we're going to look at charts. 1 to 3 strike is our trend indicator. And it only issues a signal when there is clear evidence that we are in an established trend. And 1 to 3 strike does this by looking at directionality. So price must move either up or down. We need to have volume confirmation and volatility confirmation. And if all 3 factors come together, a signal is issued. Divergence Cloud is our indicator for spotting reversals. And for this, we have developed in our lab a proprietary form of what we call volatility divergence. So typically you look at divergence using, I don't know, the RSI or the stochastics as the underlying indicator. We've went a different route and used volatility to look for divergences between price. Now, why is that? Well, because we've made an observation. This holds true almost across the board that for some reason, the bar size, so the distance from the high to the low of a bar tends to be bigger for bearish bars than for bullish bars. And we've run lots of statistics on it. And here's one such statistic, which looks at the S&P 500 stocks, and it shows to you that down bars on these stocks, on the S&P 500 stocks, tend to be almost 5% larger than up bars. So that's interesting, I find. So there can be lots of explanations for this. Some of them are psychological, that if the market goes down, people tend to panic more and unload their stocks, whereas when the market goes up, it's considered low risk, and people want to get back into the market if the market is not as volatile. So this could be some explanations. But interestingly, this observation holds true not just for stocks, but for all kinds of things, such as Bitcoin or Ethereum and other assets. So here are some statistics which back up our observation. And we have based our Divergence Cloud indicator exactly on this, this phenomena. And as it turns out, it's actually quite spot on to find reversals in the market. All right, and then we have our third indicator, which is called Volatility Crusher, designed to detect breakouts out of a sideways consolidation. So for Volatility Crusher, we not only need the breakout, but some other factors such as increased volatility also need to come together. And it turns out if all these factors come together, chances are that price will continue in the direction of the breakout for quite a bit longer. And this is exactly where this indicator bets on. All right, before I go on to the charts, Homa or Ian, are there any questions so far?
Yeah, I've actually got some interesting questions from Jason. So he's asking, so at the beginning you mentioned that these indicators were created to help users with their trading. So first part of the question is, how do these indicators change your trading results and how you approach the market?
I mean, to me, indicators, they will support you in your decision making. That's really the main role. Because in the end, you as the trader, you will make the final decision. And the more comfortable you are with your decision, the more factors that come together and the more evidence you have that price might do what you have in mind, the better it is. And we have designed our indicators to support exactly this. And what I mean by this, you'll see in a bit when we look at charts.
Yeah, I think I'll chime in there too. As someone who's used quite a lot of indicators and very few, for me, it's always helped to have indicators that, as Daniel said, can help with my decision making. I've certainly been someone who's had a lot of noise on my charts in the past too, with too many. But at the end of the day, you're still the person putting on the risk, right? So you have to kind of use the indicators if you're planning to use them to potentially know when you're wrong too, right? So if something doesn't play out how you had hoped, you're the one putting the risk on, right? We're all traders here. We all need to understand the risk that we're putting on with each trade. And at some point, hopefully the indicator helps you get, as Daniel was pointing out earlier, it helps you get to that better entry where you are risking less on your stop loss. But if the stop loss, if you're proven wrong on your hypothesis, that's all this really is, right? It's a hypothesis, then you still need to be the one to kind of call it there.
That's right. All right, any other questions, Holmes?
Yeah, and the second part of the question is, when using these indicators as your edge, what type of success ratio do typical traders have with the indicator?
We'll get to that. Yeah, perfect. I'm not going to answer this now because right now it's all theory. You haven't seen charts yet. So let's look at some charts, and I think this question will be answered just by that.
Okay, perfect. That's it for now.
All right. So without further ado, let me go over to EdgeProX. I'm just drag it in. All right. I'm just going to start with this one here. Okay, so what do we see here? These are the S&P 500 futures, and in fact, I've prepared a few examples using the ES, the S&P 500 futures, and also the Nasdaq futures on various time frames. So our indicators work on very low time frames. I even have a tick chart here, but also on very high time frames, like a daily chart. I just want to give you a bit of a rundown of what these indicators can do for you. All right, so this is these are the S&P 500s on the daily chart, and you can clearly see the Corona crisis here starting and then rebounding, and yeah, it must look familiar to most of you. Okay, so and what we have done here is we have applied our trend indicator to this chart because as you know, the S&P 500 have been trending up mainly for a very long time now. We've been in a bull market for, I don't know, 10 years probably or more. So with, of course, retracements and big corrections like during the Corona crisis and some other events, but overall it's been trending up. So I was thinking this could be a good example to showcase our trend indicator, which is called 1, 2, 3 strike. And I have applied this indicator to the chart. So let me give you a bit of an intro how this works. The bigger green arrows here, or the bigger red arrows, these are entry signals. Of course, green for a long entry and red for a short entry. Now, once you're in a trade, of course, you need to manage the trade, which is just as important as just getting, long or short. You have to do something with that position. But our indicator helps you with that. It will actually show you or suggest to you when to get out. These white arrows here, these are partial profit booking suggestions. So, and you can configure this how many times you would like to book partial profits. In this case, I think it's configured to 6 times or up to 6 times. And every time this white arrow occurs, you would take off a bit of your position size. But of course, this can be configured completely in the indicator. So here we have a couple of partial profits along the way. But of course, eventually, if evidence is there that our initial hypothesis, as Ian said, is no longer valid, then you will get a counter entry. And then this means to you that you will close out your long position, even though we haven't reached our 6 partial profits yet in this case, if we are configured for 6 partial profits. Oftentimes, you will hit all these profits. So if you count up, sometimes they will be hit, because especially if you're on a strongly trending market, this indicator works exceptionally well because it's designed for exactly such a market. Now, so I tell you this, that, oh, wow, it looks pretty good. And you can probably guess that, oh, wow, this seems to be not bad just by looking at it. But you don't have any, quantitative backup for your hypothesis. Just you have a gut feeling that this indicator could be quite useful in a trending market. But wouldn't it be nice if we had some evidence how well this indicator has worked in the past? Well, we actually have built in such an evidence into this indicator. So I'm going to go to the settings of this indicator just by double clicking here. I'm going to go to display, and I'm going to enable what we call our instant efficiency statistics. All right, so I'm going to say update. And now what you can see here in the top left corner are 2 numbers. One for which we call long efficiency, which is at 75%, and one is called short efficiency, which is at 64% in this case. This means, historically speaking, our long signals were winners 75% of all times, and our short signals were winners 64% of all times in a given look back period. Of course, you need to know what based on which time horizon these statistics were calculated on. And you can see this here since 2017. The look back period can be customized in the settings of the indicator. So basically what you can see here is that since 2017, the long direction has worked better than the short one, which is not very surprising because the S&P 500 or the S&P 500 futures have been in a strong bullish uptrend. So naturally, you would expect a higher efficiency rating than the short side. So this is an interesting way, but you can also, an interesting fact, but you can also see that this indicator seems to be working quite well. But as you know, every indicator, and also our indicator is no exception to this, they come with parameters. And in fact, if you click on this little icon here, the settings icon, you will see all the parameters which affect the logic of our indicator. Now, oftentimes you as a trader, you'd like to know, what if I make a little change to these parameters? Will this improve how well the indicator is working for this symbol and this time frame or not? In this case, actually, we do have some empirical evidence for this. So look at this. If I move some of these sliders, let's say from 20 to a different value and observe these statistics here, if I move this, can you see it? The update in real time right away. So that's the indicator underneath. But you can also see here, what is the impact of such a change? And this works with every single setting on the chart for this indicator, as you can see here. So as you move things around, these statistics, historical statistics, will update in real time as you move the sliders around, which makes it very easy for you to find good parameters for this indicator, parameters that you are comfortable with. Of course, these numbers alone will never be your only criteria. Also, the entries, if you just look at the chart, then you need to make sense to you. You don't want to have entries where perhaps you had like a very huge drop down and just by chance price recovered. That's typically not a good trade. So both the entries and exits need to make sense to you just by looking at the chart. But of course, also these numbers should make you feel comfortable. Okay, so this is 1, 2, 3 strike. Let's have a look at another indicator.
Danny,
So
I'm just going to interject for a second. I'm not sure I was answering questions. Can you show a lower time frame for this, or did you already?
Oh, I will show other time frames. Yeah, let me just give an overview of all the indicators. I'm going to look at smaller time frames as well.
Great.
Yeah. Okay, just to contrast this, I'm going to switch over to this tab here. It's going to be the same symbol, but this time we have applied our Divergence Cloud indicator. And let me explain to you the visuals first. So as you can see here, you have these greenish glows and reddish glows on the chart. These are actually divergences which are detected by our indicator. Of course, the greenish glow is a bullish divergence, and the reddish glow is a bearish divergence. And if you are familiar with divergence, a divergence is a warning sign which you can take advantage of, that a trend might have come to an end and may reverse. And this is exactly what this indicator is designed for. It will spot trend reversals using divergence. And similarly to 1, 2, 3 strike, our long entries are denoted by these bigger triangles here, and short entries by these reddish ones. They do look a bit differently from 1, 2, 3 strike, visually at least. And this was done by design, because sometimes you may want to apply maybe 2 of our indicators to the same short. And that way you can always know which shape belongs to which indicator. But these are just our default settings. Everything of this indicator and all our indicators can be customized. This could be the size of these arrows, the colors, whether you would like to see the glowing background color, the exit entry lines, whether you would like to see these statistics, which I had just shown to you, what should be the font size and so forth. So all of these can be customized with our indicators. And let me just enable these statistics here as well. And by default, they are enabled. I just disabled them for the sake of this presentation. So I enable them. They show up here. Also, the positioning of this box can be changed. And you can see here that for Divergence Cloud, it tends to work quite nicely, at least historically speaking, in the long direction. And we had some really nice trades here, but not so well on the short direction. And to me, this is an interesting observation. Maybe not so interesting because it's the S&P 500 and you would expect quite a bit of difference here between the long and the short direction. But this would tell me as a trader, perhaps for this indicator, I don't want to take these short signals. The success rate, historically speaking, again, this is all based on historical performance, and historical performance is not indicative of future performance. But historically speaking, these signals have not been working out so well to the short side. So to me as a trader, I would say, well, perhaps here I want to focus on the long signals and not the short. And sometimes staying out of the market is the best trading advice that you can take. So so that's another important use case for these statistics, just to perhaps sometimes stay out of a trade. Do not take this trade because it hasn't been working so well historically speaking. All right, so these were 1 to 3 strike and Divergence Cloud on long time frames, but let's have a look at a shorter time frame. Here again we have Divergence Cloud on the 15-minute S&P E-mini future. And here, just for the sake of the example, I have disabled the entry-exit lines, the little dotted lines that we had. I disabled them because it is possible, and I would like to show it to you. And by looking at the statistics, also on these lower time frames, these indicators have been working quite successfully in the past. Same with the 1 to 3 strikes. You get fairly good historic success rates with these indicators also on lower time frames. Here, for example, we have the Nasdaq futures on a 1-minute time frame. Of course, on a 1-minute time frame, the look back period is much shorter. So for the daily, I think we are looking back a couple of years because it makes sense for a daily chart. But on the 1-minute chart, I don't believe it makes sense to look back for many years. Here, the look back period is just a week. So for the last week, we had fairly good success rates on the 1 to 3 strike indicator for the Nasdaq futures. Now, there's one indicator which is still left to be showcased. And in fact, this is my favorite one because it is the sideways indicator, which I mentioned before. We call this one Volatility Crusher, and it is designed to identify breakouts out of a sideways consolidation phase. So how does this indicator work? Again, you see these bigger arrows here, the yellow one for short entries and the bluish one for long entries. And they are typically happening when a breakout out of this box here happens, either to the short side or to the long side. Now, when this breakout occurs, when this lower line here, and this is really just a support indicator, breaks above the upper band, then we have two factors coming together. We have increased volatility, that's where the name comes from, Volatility Crusher, and we have a breakout. And if these two factors come together, statistically speaking, and based on our research, chances are that price will continue in the direction of the breakout. And this is exactly what this indicator is trying to do. So let's have a look at some of the examples. And this is just today's chart of the ES futures. So it was mainly a bullish day. We had a couple of retracements, one of which was spotted here at the overnight, where we had bearish breakout, which was successful. And these two lines here, the bluish lines below, these are our two profit targets. So here we enter and we hit our two profit targets. Then price reversed. Again, we had a breakout. We hit our two profit targets almost immediately afterwards. Another breakout here, which also would have hit target. Another breakout here, and so forth. You can see that it worked quite well today. This was a loser, but on general, a successful day. And of course, we also do have our statistics for this indicator. And you can see here that the long efficiency and short efficiency are quite good. But here you need to keep in mind that our targets are typically a bit closer than our stop level, which is the stop level here. This is why you will see typically higher success rates here, because you're aiming for less. Yeah. But nonetheless, this indicator has the potential to spot these breakouts quite reliably. What you see down here in the salmon color, this line here, this is our stop level, and you can see this is a trailing stop. So as price moves in the direction that we want, stop will be tightened and trailed accordingly. And of course, every single setting of this indicator can be changed. And if you change it, and just observe this, these statistics will update as well in real time. Yeah. All right, so I will not have time to discuss all these settings here, but rest assured that all of our indicators, they come with comprehensive documentation. We have also recorded a 5-hour masterclass on the topic of these 3 indicators, which will explain to you every single little thing that you need to know for all these parameters here and how to get the most out of our indicators. And last but not least, before I go back to my slides, here's one more example just applied to a tick chart, which is also possible for our indicators that they work on tick charts as well. And also on tick charts, they can be dialed in quite nicely to spot or to trade breakouts for, in this case, breakouts for the S&P 500 futures or the NASDAQ futures or other types of futures contracts. Holmes, are there any questions before I go back to the slides?
Yep. So Richard wants to know if the Volatility Crusher is good for Forex.
So there's no restriction for the asset class. So every indicator can be applied to any asset class which has price action. Yeah, it works on Forex as well. As long as we have price movements, the indicators will work.
Jason wants to know how we handle risk management with the green arrow signal.
This is a bit up to you. So the indicator will, let me just go back here, will suggest entries to you and partial exits, but this doesn't mean that you cannot, in addition to all this, use your own risk management, perhaps put your own stop loss. If you're not comfortable with a deeper retracement, use your own stop levels. So this can be combined with any of your own risk management strategies.
Okay, and one last question for now from Dan. Okay, so for the IET, so the efficiency ratings, is there any kind of report that can be generated for average losers, winners, profit factor, and equity curve?
No, we don't do this because, and there's a reason for this, because we do not have the information for that. We do not know what your trade size was. We do not know how much you've taken off on every of these exits. And of course, all these would need to be known to generate these statistics, which you would typically get when you backtest an automated strategy. But this is just, it's an indication to you how well these signals have been working. Historically speaking, they're not an indication how much money you may have made, not at all. So to me, the way I use it, mainly in 2 ways. So first of all, I would like to see if there is any long short bias with this indicator and in a given symbol. So as you've seen here with Divergence Cloud, to me, I mean, I want to go long only with this indicator, because to me, I want to stack my odds. So I'm going to go long only, and I'm not going to take any short trades of this indicator. That's number one, how I use it. And number two, I use it to see how well my parameters, if I change them, how well this change, how beneficial this change was, historically speaking. Yeah, as you can see here, because sometimes I want to maybe change things around. Maybe, I'm not so comfortable with certain things. I would like to see what is the effect of changing a parameter. Otherwise, because I don't want to guess in the dark. Change something and I don't really know if it's better or worse. Now I have a bit of evidence if this change was beneficial or not. These are the 2 main things how I use these statistics.
Yeah, I think for Dan too, I think it's a great question because Dan, and maybe if this was generating your entries and stops and exits, then you can pull that report. But as Daniel said, a lot of the factors as far as your average winners, losers, all of that are going to be dependent on you as the trader executing and interpreting this information. So the goal is to present the information in a way to you with these indicators that can be utilized to make those trading decisions. But at the end of the day, Daniel can't sit here if, you're someone like me who maybe looked at the signal, took it, and then allowed my stop loss to go against me for 20 points. He's going to say, well, why did you do that?
Exactly. And it's very important that you use your own risk management strategy of this in addition to what the indicator shows you. Just an example, let's look at this signal here. we had our entry, but then price went to the downside for quite a bit. I bet you most of you, this is a daily chart, you would not have waited out this retracement, would have exited this much earlier. So, which for good reason. So, yeah, that's another point to be made.
Daniel, do we have time for a couple of other questions, or do you need to move on?
Yes.
Okay.
We can maybe one more question and maybe perhaps a few at the end.
Okay, so James wants to know about the chart at the bottom and how this is related to our indicators.
This one here, right? I will not have time to go into it. This is just a supporting second indicator which we ship with the Volatility Crusher, which allows you to understand a little bit more the internal logic of why these signals were generated. I will not be able to explain this today. It will take a bit too long, but with our documentation and with our masterclass, we have explained this indicator in all detail. So rest assured, if you want to know how it works, you will get your chance.
And the bars right on top, is that volume? The bars right on top?
This is just volume, yeah.
Yeah. Okay, thanks.
But this doesn't come with our indicator. It's just the default setting of the chart in this case, which comes with volume, as you can see here. Okay, so let me go back to my slides. All right, so we looked at some charts. I've shown to you what we call IET, Instant Efficiency Technology. And I already told you that these statistics for long efficiency and short efficiency, I use them to find good parameters for my indicator. I need to have instant feedback. I need to know if I change a parameter, was this change any good or not? So these statistics allow me to do this. And I also use it a lot to identify any long short bias. So how well is this indicator working on the short side versus the long side? And especially for Forex, somebody mentioned Forex. Yeah, oftentimes you get a good short bias there for some Forex symbols. For stocks, typically, stocks or the futures, the S&P futures, they've been trending up for so long, we've been bullish for so long, you will typically see a long bias, but you never know. It all depends how you configured the indicator, what symbol you're looking at, and which time frame, of course, you're looking at. All right, so now, as a big thank you for those who have stayed around, we have put together with EdgeClear value pack for you, a proposition. So you will get today all three indicators, the 1 to 3 strike, the Divergence Cloud, and the Volatility Crusher for lifetime. No additional payments required. You will get our 5-hour masterclass on the topic of these three indicators, which will tell you everything you need to know. No topic is left out on how to get the most out of these indicators. You will also get IET, our statistics, and you will get a $200 store credit, which can be used for any further purchase on our store. Tradingindicators.com, or any custom project that you have in mind. So we do a lot of custom projects where, some of you comes to me and say, hey, Daniel, can you do this for me? I have this idea about trading. And typically I say, yes, of course. And you could use these $200 store credit for any such project that you have in mind. So this typically retails at $1,394. But as a thank you today, we are going to discount this price by $650, so give or take 50%, and it is available for a limited time for $747, which will entail all these indicators. If you go to our website, these indicators alone will cost $797 typically, the retail price. But today, you will get all 4 items here, including the $200 store credit for only $747. And all you need to do is to either go to the EdgeClear site that Ian mentioned at the beginning, and I'm sure Ian will post it into the chat in just a second, or you can go directly to our tradingindicators.com site /edge. And so www.tradingindicators.com/edge. And there we have put together a product page where you can see additional information about all these 4 items here. You see screenshots, you'll see installation instructions, you'll see videos and so forth. So everything you want to know about these indicators. And this is available for a limited time. And just a reminder, we do have, of course, we support EdgeClear, which That's a great platform. But we also support some of the other platforms that you may have heard about. And depending on the capabilities of these platforms, some of the UI widgets, such as the slider to adjust parameters, may not be available. But IET, our statistics, is available on all platforms. All right, so go to our homepage at tradingindicators.com/edge, and if you're interested, take advantage of this offer. So this leaves me to just say thank you so much for sticking around, for giving me the opportunity to showcase our 3 market sense indicators. And if you have any questions, we love to hear from you. Any feedback, good, bad, or funny, it doesn't matter. Just send us a message at tradingindicators.com/contact. We get back to every single one of you if you contact us. So thanks so much. And Ian, I'll hand the mic back to you.
Of course. Thank you, Daniel. I appreciate it. It was awesome to get an overview of all the statistics and the indicators, of course. The slider feature, for the record, in EdgeProX, because I've thrown their indicators up before, it's awesome because you can kind of real-time optimize things. It's pretty cool. I don't want to short sell that. So being able to see those adjustments is great. And yeah, thank you for coming on. Hopefully everyone should have got the link I posted in the chat as well. And because you all registered, you'll get an email from us with the recording and all of that. And I'll include the link to our page with trading indicators so that you can view all of the offers. This is an awesome deal as well, in my opinion, from Daniel. So thank you. And I hope if there's any other questions, Homa, I don't know if you wanted to throw anything else out there.
I was just going to say that if there were any questions we didn't get to, please email us. We always make sure to get back to everybody. I'll just, what I'll do is I'm going to put our email in the chat box, and we will watch out for them.
Excellent. And same goes for us. We're super responsive here at EdgeClear. So if there's anything that came up, send me an email or reach out via the contact form, and we'll make sure that we get you taken care of.
Awesome.
Perfect.
Thanks so much, Ian.
Thank you.
Bye, guys.
Bye, everyone.
Bye-bye.